Low appraisals suck. I know, I get them, and I just got one this morning actually. Today I want to show you a strategy that we use, that I use to help you with the low appraisals. It's a great way to mitigate low appraisals, and it's a great way if you're using this strategy to remove the appraisal contingency when you're making an offer. Some of my real estate agents are using this and other strategies that we have with great success in getting offers accepted in this absolutely crazy market. So let's go over it. Let me show you an example of how it works, and then I'll go over some points at the end. Oh, I want to start by saying that brokers are better. Mortgage brokers are better. I had to show you the t-shirt. Okay, so let's get started here. Okay, so here we have, I'm going to put myself over here. So let's say the listing price is $700,000, and your buyers love the house. There's multiple offers, and they decide to make an offer of $780,000. So this is what it would look like. The numbers would look like if the appraisal came in okay. The appraisal value comes in at value, $780,000. They're putting 20% down. The loan amount is $624, 30-year mortgage, 3% interest rate, which is actually high right now, because rates have gone under 3%. These slides are a little old. Payments $2,624, $2,624, and cash to close is 20%, $156,000. That's if the appraisal comes in good. So let's see what happens if the appraisal comes in low and we don't use the strategy. Just normally they'd have to come in with more money, right? So purchase price is $780. The appraisal comes in at $680,000. So it comes in at $100,000 low. So this is an extreme example, right? Usually the appraisals don't come in this low. Sometimes they do, but usually they don't. So I'm using an extreme example, a high purchase price, to show you how it works. That it even works in this extreme example. So they're still putting 80% down. So the loan amount goes down because 80% of 680, that's all the lender's only going to lend you 80% of 680. So the loan amount goes to 544, still 3% interest rate. Payment goes down a little bit, $2287. It's actually $336 less, the payment each month. But they have to come in with $236,000 now. They have to come in with $80,000 more. So that's tough, right? That's tough for a lot of buyers. Most first-time home buyers just don't have that cash, and you know what? Even if they do have the cash, that's a tough one. That's a tough sell, and that's a tough pill to swallow. So let's look at the strategy that we use to mitigate this, and how we can come in with a lot less money. Okay, so low appraisal. So what the strategy is, we're gonna raise the loan to value, and we're gonna buy out the mortgage insurance. So let's see how that works. So purchase price is $780 still. Appraisal comes in $100,000 low. So what we're gonna do is we're gonna raise the loan amount to $624, to the same amount it was before. So if we raise the loan amount to $624, the loan to value goes to 92%. So they're only bringing in, oh, excuse me, let me go back here. I pressed the wrong button. They're only bringing 8% now, 8% down payment. And as you know, if you're bringing less than 20% down, you have to pay mortgage insurance each month. So what we're going to do is there's a way to just buy out the mortgage insurance. So just pay a lump sum. So we're not going to add that payment to the mortgage payment each month. It's called just buying out the mortgage insurance. A lot of people don't know you can do this, but we can. So that's what we're going to do. So we raise the loan amount, raise the loan to value, and we're going to have to pay another $11,200 to buy out the mortgage insurance. And that's an estimate. This is just an example. So the buyers now only have to bring $11,200 because now their down payment, their cash to close, is $156,000 plus $11,200. Their payment's the same as it was in the first example because we brought the loan amount to the same amount as it was before. So The payment's 2624, same as it was if the appraisal came in okay. They just have to bring in $11,200 more instead of $80,000. So that's more doable, right? Only bring in 11,200 more instead of $80,000. A lot of buyers will be okay with that, and you're saving a ton of money. So this is a great appraisal. This is it's a great strategy. If you get a low appraisal, just buying out the mortgage insurance, right? It comes out in the end, it comes out pretty much the same. And like I said, this is an extreme example, right? If the appraisal only comes in at $20,000, that's a lot easier. So the key to this is your buyers have to be coming in with at least 10% down, 10 to 20%. 20% is better, or it just doesn't work. There's just not enough room in the down payment to make this work. Appraisals are a problem, right? This works only when you're bringing 10 or 20% down, right? It doesn't work if we're bringing less down. Like I said, we raise the loan to value and pay out the mortgage insurance in a lump sum. Now, you don't have to be an expert in this, right? You don't have to know this like I do, because I'm the expert in financing. I'm the guy that's going to explain it to your buyers and give them that example and show them what the numbers are going to look like if we get a low appraisal, right? The other benefit of this is we can remove the appraisal contingency in this example up to $80,000, right? Because it still works. We've talked to the buyers ahead of time. Another benefit is they're more comfortable making a higher offer over list because they know we have a backup plan. They know we have a strategy. If the appraisal comes in low, they know and they're comfortable with what we were talking about. You know, we've shown them all these numbers. We've gone through it with them, and they understand that if the appraisal comes in low, that we have a strategy. They know that their payment's going to be exactly the same. They just have to bring a little bit more to close. So the other benefit of this is they're more comfortable coming in strong with higher than list offers. This strategy has multiple benefits in this crazy market. Not only that we have a strategy for low appraisals, you can remove the loan contingency, number two, and your buyers are comfortable. They know what's going on. They know that we have a strategy. They know we have a backup plan in case there's a low appraisal. So they're going to come in strong. They're going to be comfortable with that, right? If your buyers aren't comfortable, if they're confused, they're not going to continue, right? We all know that. As real estate agents, as loan officers, we know that confused buyers, they don't continue on. They'll figure out a reason to get out of the deal. So that's what we talk to them about this ahead of time, and that's the one of the beauties of this. So if you have any questions about this, reach out. I have other strategies to help you get your offer accepted. This is a good one. In combination with my other strategies, I have real estate agents who are killing it in this market, right? So give me a call, 562-576-6885. I almost forgot my own phone number. I'm so excited about this. So give me a call, jesse@jesserivera.com is my email. You can text me, you can email me. Let's talk about this. Let's talk about how we can get your buyers comfortable with making over-list offers. Let's talk about how we can work together to get you more offers accepted and make more money this year, okay? Great talking to you. Hope you enjoyed this video.